Hi everyone, welcome back to Be Rich. It's just me in the studio today. Anand is still in Bangalore and he's expected back tomorrow. So probably we'll have him in the studio day after. Shashwat is busy getting back to college. So unfortunately I couldn't pull him in. So I brought something interesting to talk to you guys today. I was going to talk to you about Sony's plan to sell Hotstar to Sony, and the news broke about this. And I thought I'll explore further on this topic of why some MNCs are struggling to keep their businesses afloat in India. Sony Pictures Entertainment has begun initial talks of a possible acquisition of Disney's India business. The talks are part of Sony's contingency plan should the ongoing merger with Zee Enterprise face delays or even falter. Sony has been trying to pick up Zee for quite a long time and has been facing multiple delays due to regulatory challenges. And the Japan-based parent company of SPE, which is Sony, is growing impatient in the progress and is prompting the idea of looking at alternative plans. Disney India is offering, what is it? Disney India's business is Disney Star, a notable player in the Indian entertainment landscape with 70 multilingual channels, and Disney Hotstar online streaming service is the crown jewel. Its value, however, has decreased due to several factors over the last year, losing key leaders and discontinuation of some of its content deals. Notably, losing the IPL deal has been a death blow to Sony and Disney Hotstar in India. Several companies, including Reliance, has been interested. The Adani Group has shown interest, and the Sun TV network also has shown interest in acquiring either the part or the full extent of Disney India's business. The problem has been the valuation concerns. Industry experts believe that Sony India's business might be a fraction of what its previous value was, and local shifts in media and entertainment sectors have made a change to the valuation. And the linear entertainment segment remains profitable, but sports and digital segments have faced losses. The executives in Sony see Disney India as more attractive proposition compared to Zee, mainly due to the cultural similarities and the evolving media landscape. Both share similar outlook and similar kind of content and similar kind of working. So they're prepared to move aggressively for this opportunity, especially if the Zee deal looks like it's going to be collapsing. Key executives of Sony, including the CEO, have prior association with Disney and Fox, and possibly this will facilitate a smooth negotiation and understanding the business landscape, considering both share previous management and there's a communication, there's already kind of an existing relationship between both the companies. Thanks to their shared management, there might be a smoother process and a quicker process with the Sony. But Sony-Zee merger has already been marred with legal and regulatory challenges, including opposition from financial lenders and investigation into the conduct of Zee management. This is not going to be an easy merger, even if Disney and Sony agree on the price and the methodology. Some of the industry insiders believe that acquiring with India's Disney business might be more strategic and sound for Sony, given the recent complications they've been facing, and they might improve their valuation and also have something for the leadership to show. The main reason why Disney is looking at exiting India is because there's been a huge loss in paid subscription base. By the end of the quarter of June, subscription base losses are standing at 12.5 million. And significant numbers of MNCs have also been recent years been exiting India. If you look from 2014, November of 2021, around 2,783 foreign companies have ceased operations in India. Despite exit, India still remains very attractive and more companies are trying to enter India. The government production linked incentive, the PLI schemes are very attractive to MNCs and their subsidiaries. Several industry experts and officials argue that Indian market hasn't failed, but failure has been part of these companies to understand the market diversity and the operations in India. India is a very wide market, and we do know culturally it is very diverse from south all the way to north. As we Indians know, language barriers are there, cultural barriers are there, and for any media company, especially which is a non-Indian company, to enter India, to understand the nuances of these cultural diversity is very difficult. It's very famously said, India is not one country, but more like many countries clubbed together under one. So many MNCs fail to see this, and this leads to sudden knee-jerk reaction from these MNCs after landing in India. Success in India demands understanding these multiple many markets as they say, mini markets, necessitating the nuances and localizing your strategies, which these companies have failed. Even in their advertising and marketing, the nuances have to be paid attention to, and the strategy has to be localized. Companies that view India as several mini markets and focus on specific sub-segments have tend to do better than the ones who have not. So sector-specific insight, if you want to look at automobile industry, if you look at foreign automakers like Ford and General Motors have failed due to lack of proper segmentation and understanding of the Indian market. In banking, foreign banks face many challenges and operation costs. And even recently, Citibank has exited in India, though it was considered to be a very profitable business in India for them, their wealth management business. They've handed it over to Axis. And there's also been issues in that too. There's cultural differences, the way Citibank ran and the way Axis Bank runs. So the marriage between Axis Bank and the existing Citibank has not been a very happy marriage. And if you look at even telecommunication sectors, global giants have entered Indian telecom sector and have gone running out. We all know about Telenor, and we know about Docomo, and we know about Hutch. So these are all things to remember. Why MNCs face these challenges is because they are trying to achieve scale, and dealing with regulatory issues and adapting to local market dynamics has always been a problem for them. So is this what happened to Disney? I would say in a way, yes. The main loss of the IPL has really hurt their bottom numbers, I would say, because IPL was one of the main attractive things of Disney Hotstar and their platform and their subscription. Once IPL left their portfolio, subscribers also left them in droves. Because there's not much, it's a very niche segment in India which consume Star Wars, who consume Marvel, and rest of them have left Hotstar. All the HBO platforms and all the other ones have left. They've all moved to Reliance's Jio platform. This has hurt them a lot, and subscriber base have evaporated because of this. Many of these MNCs, aside from Disney, focus on short-term focus, and external factors such as global macroeconomics conditions also play a part in this. Yes, Indian market is sometimes volatile, and especially in the entertainment sector, and keeping track of these cultural divisions in India, especially in the entertainment sector, can be a problem. But the companies which are willing to invest in India in the long term and understand the market long term and make India a core part of their strategies, like Walmart, which is Flipkart now, and companies which make India the core part of their strategies, such as Walmart, Flipkart, or the alcohol brand which we know as Diageo, are more likely to succeed. So this kind of gives you a broad picture on why Disney India has failed, and why Disney Hotstar, they're eager to leave India. And this is also tracks to what is happening to Disney in the US, where they've been struggling, bringing back their old CEO. And now there's been a dramatic shift in Disney, and they've been focusing on theme parks now. They're eager to open more theme parks across the United States and move away from entertainment and digital media and digital platforms for some time now, because it seems to be a struggling sector for them, and they want to go back to their core business, which has been the theme park business. Anyway, I hope you found this video informative and entertaining, and I hope you do share this video with your friends and family who would find this kind of content interesting. Thank you for watching Be Rich today, and I'll be back tomorrow with another one. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below, and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.